All right, we'll go ahead and get started, guys. Today's lesson is going to be on trading the break of the pre-market high. That's something we do almost every day. It's one of the main strategies that we use. Obviously, we trade in momentum stocks, and a lot of times we're going to trade flat top breakouts. And most of the time, that flat top is going to be the pre-market high. So we're going to go over that briefly. If you guys have any questions, I'll open it up to you guys after we're done with the lesson. If you want to follow along, I'm going to have some stuff on my screen, but you can see basically everything that I'm going to talk about on TOS. I'll just give you the ticker and kind of the time and whatnot. Let's first start with kind of how we find what we're looking for when it comes to good pre-market setups. We've talked about creating your watch list and whatnot before. This is kind of tapping into that a little bit, but look at your scanners, just kind of surf around, look at different tickers, look on, Market Chameleon, whatever source you use to kind of see the highest moving gappers of that day. And then you'll pull those up and you'll kind of take a look at them. And what you want to see pre-market is a strong move to the upside, high consolidation, and then we will hopefully then buy for a new high on the flat top breakout, whether it's pre-market or when market opens. Usually it's going to be when market opens, we'll buy for that flat top breakout of the pre-market high. So there's a couple ways you can do it. We've talked about it a little bit. You can buy just for the break, which would be, this certain level, and there's nothing else to it. Everyone that's buying the flat top breakout will buy at that level. Or you could buy with anticipation of the break, which you've seen us kind of do a little bit more. By doing that, you can lower your average and give yourself a little wiggle room for a pullback, which is always good, but just know that does come with more risk. And if you do that, you should be taking a fraction of your full position size. So if you're buying with anticipation of the break, it should be a smaller order than the order that you're buying for the flat top breakout. So, and if we say anticipation of the break, that can mean we're taking a starter. If you hear stuff like that, that's basically what it means. And you can usually decide whether you want to buy with anticipation of or for the breakout by looking at the level 2. If it's green, if you see a bunch of orders coming in, if you see them stacking up, then probably a good idea. You can take a starter. Again, it's going to be a little more risky, but you are going to give yourself some wiggle room there. And when you buy with anticipation or for the breakout, you need to have a plan. So we've talked about finding the gappers. We've talked about dissecting the charts and deciding whether it's a good setup. That's just part of it. Now, if you decide it is a good setup, now you have to have a plan. So decide how many shares total you want to buy in with. You need to set proper risk to reward ratios. So set where you're going to take profits and where you're going to stop out. You need to have those levels set, whether it's psychological resistance lines or certain percent gains, however you want to do it. Just have those price intervals in your mind and in your plan, and make sure you follow those. So you can look at the chart to help you decide those, or again, if you have a particular plan that you like to implement per trade, you can do that as well. And again, I'm going to go back to the level 2 because it's super important when you're playing breakouts, and especially if you're buying with anticipation of the break. There can be like really big buyers or big sellers stacking up, and without you having that information, it's a lot harder to make an educated decision. So make sure you're looking at the level 2 and try to see what's going on, like right before or as you're about to buy for that breakout or with anticipation. You can alter your plan if you need to based on the level 2. So if you go in with a plan and you're looking at a chart and you're saying, all right, here we go, this is my plan. If you need to, you can alter it if something crazy happens on the level 2, whether good or bad. So just keep your eyes on that level 2 when you're trading. You need to diagnose the chart and decide if it's a good pre-market setup, which again, as we talked about, is a strong move to the upside and tight consolidation. Those are the things we want to see to then say, okay, when market opens, this is probably going to be a good pre-market setup. So formulate your plan, and when it's time, execute that plan. And remember, executing your plan doesn't always mean making money, unfortunately. If it doesn't work out, you still need to stick to your plan and stop out and move on to the next trade. So just remember, executing your plan doesn't always mean, buying for the breakout and then selling to make money. Unfortunately, not every trade is going to work out. And sticking to your plan does also mean having those risk reward ratios and stopping out when you need to, and moving on to the next trade without taking a super, monumental loss that can mess up your account or your confidence or what have you. So that's basically kind of what we look for in a pre-market setup. And then how we trade it. Let's say if it's market open, we are going to buy for the break of that flat top pre-market level. So let's look at a couple examples here. If you guys have your Thinkorswim or whatever platform you're using, we'll look at a couple that didn't work out or haven't worked out yet. Maybe worked out a little later, and then we'll look at a couple that worked out. So we'll look at Snapchat today. You guys want to pull up Snap, SNAP. Look, you can look at the 5-minute or the 1 minute. And I have this up on my screen, so if you guys end up watching the recording, you can see exactly what I'm looking at. So the pre-market high today on Snapchat was, let's just say, 966. As soon as market opened, we obviously don't trade those first 2 minutes. It was just kind of, doing its thing. The third 1 minute candle, it broke that pre-market high by like 2 pennies. And then the next candle by 1 more penny. So let's say it broke it by 3 pennies and then had a very significant move to the downside, in my opinion. Went from 969 all the way down to 935. So that was an instance where as soon as market opened, the third minute, it technically broke. The fourth minute, again, another penny. So that's where it broke the pre-market high, but didn't really do anything. So that's an instance where if you're trading this and you're buying with anticipation of or for the break of the pre-market high, this is an instance where it wouldn't work out. So you would, again, want to have proper risk management and set those levels of take profits in and stopping out. So unfortunately, if you traded this one, you would have stopped out. But if you really like the pre-market setup and things still look good, it's not a one and done thing. You can look at this throughout the day, and if it does present a good setup, you can still trade it for that level. So in this case, if you look at 947 on Snap on the 1 minute, you can see it tried again. 2 candles right here, basically double topped at the pre-market high. So if you bought with anticipation of, you wouldn't have won on this trade. If you waited for the flat top breakout, you wouldn't have even entered. So that's another instance where it wouldn't have worked out, or you wouldn't have even taken it. Now, come over and look at 1015, and here it finally broke. It was a decent break. So it broke that level of 966. This candle went to 975. If you bought with anticipation of or for the breakout, you might have taken profit. 975 is a psychological resistance line, so maybe you took a little bit of profit there and then stopped out at break even. But you can see again, so 1016, it finally broke, went up to 975. You can see it came down at 1018 and 1019, and it now flipped that pre-market high from resistance to support. You can see it perfectly bounced off of that twice and then continued higher all the way up to 985. If you're actually looking at Snap right now, it's currently bouncing off that support again of the pre-market high. We'll see if that holds, but that's just an example of trading it where it didn't work out, the first time or two, and then it finally did work out. Now let's take a look at we'll look at another one from today. So AGFS. This is the stock we were looking at this morning. Traded a couple times. So we have this pre-market high set on my screen. I have a line, as you guys can see, where it's at. So first 2 minutes, we obviously don't trade. You can see 1, 2, 3, 4, 5, 6, 7. So eight minutes into market open, it broke that. It broke that level of, we'll call it 273, 74. It broke that and went to, basically 279, 280. So it only broke, a few pennies. And as you can see, it just kind of chopped around after that, bouncing off that. Again, it flipped. Once it broke, it flipped that pre-market high from resistance to support. You can see it bounced off of it, 4 or 5 times, and then it did end up breaking under it. And you can come over, see it again, several minutes later. You can look at it on the 5 minute to see, in this particular situation, a lot easier. So that second 5 minute candle, it broke. Third, fourth, fifth, it's just kind of bouncing around. It makes a new high. So it only broke by a few pennies. Obviously, we traded this morning. Maybe you made, a few pennies a share. Maybe you stopped out, break even, whatever. So this is an instance where it unfortunately didn't work out and hasn't yet. Obviously, we're going to monitor this throughout the day, but that's another example of it just not working, because we are going to show those because they're going to happen. So now let's look at a couple that did work out. So let's look, this is from yesterday. Let's look at EPIX. We're going to look at pre-market yesterday. So you can see, we'll call the pre-market high, it's basically let's say 227. So we drew a line there. Market opens. Obviously, we don't trade the first couple minutes. We'll look at it on the 5-minute chart. So the third 5-minute candle, you can see that it broke it. Not by a lot, by a few pennies. The second 5-minute candle, it dropped below it a little bit. So it did dip below. And then, as you can see, it kind of skyrocketed. So this was an instance where it was a great trade. And this is an instance where buying with anticipation of the break would have really set you up for success because, again, looking at it on the 1-minute chart, when it did break, it had, 1, 2, 3, 4, 5 candles basically trading just a little above, just a little below. So let's say you bought with anticipation of the break. Let's say you bought at 225. Well, you have 3, 4, 5 pennies a share to play with, and that's all you needed because this didn't drop below, 221 or so. So if you bought with 225, your risk reward ratios, you're not stopping out at 4 cents. So if you bought with anticipation of the break, or even, pre-market high break, again, we'll call it 227. This was a great trade. If you guys took this yesterday, I think some of you did. We weren't looking at it at the time, but this would have been a great trade because it broke, kind of chopped around a little bit, and then really, really opened up and went over 200% that day. So that's an instance where it was a great trade. And again, buying with anticipation of the break would have really worked out on this one. Big Trader, I do see your question. I'm going to go through a couple more of these, and then I'll answer that for you. That was EPIX, and that was pre-market yesterday. So let's look at another one from yesterday. Let's look at the first 3 minutes of market open. Again, we don't trade the first two. That 3rd-minute candle perfectly came up and tapped it. So it was at a low of 218. That third 1-minute candle came up and tapped, just for the sake of even numbers, we'll call it 221. Perfectly tapped it. The next 1-minute candle broke through it, which we want to see. And then the 1-minute candle after that bounced right off of it and flipped that from, again, resistance to support. So the 4th 1-minute candle is where it finally broke through. The 5th one bounced off of it, flipped that pre-market high from resistance to support, and skyrocketed. So this would have been, again, a great trade to buy with anticipation of, or again, even just for a flat top breakout. This would have been a great trade because broke through, again, we'll call it 221, perfectly bounced off of it, and then soared all the way up, around 230. So that would have been a really good trade. With risk management, you would have made a good bit of money on that, never stopped out. So pre-market highs, whether it's the anticipation of or the breakout, is a really good play. We do it every single day. So try to focus on your pre-market setups. Try to find stuff that looks good. Again, we want to see a large move to the upside. We want to see tight consolidation. We'd really like to see a catalyst. And then we want to see, obviously, a move higher, which we would trade. So does anyone have any questions on trading the pre-market high? Trader, I do see your question. When you say some of the other resources you use, are you referring to like finding stocks to then look at to see if they're good for the break of the pre-market high? I don't see him in here, so I'll reply to his question when we're done here. So does anyone have any questions about anything else? Doesn't have to be pre-market high. Anything about trading, anything you've seen this week, anything that you want to go over? We did have a little bit of momentum today, which was good. Saw a couple things running, made a little bit of money here and there. So that's a good sign. Hopefully, that's something that keeps going. We've had some really big tech stocks have really bad earnings this week, which surprisingly hasn't really brought the market down a ton. Facebook's was really bad last night. I shorted that. It made a little bit. We do have another big one today. I believe Apple earnings are today, and that's a very large tech stock in the market. I think of all of the tech stocks with earnings this week, I think that's probably the only one that has a chance to beat and do well. So I'll definitely be watching that after hours today. If you guys don't have any other questions, again, these are beginner lessons, so We don't go super in depth on a lot of advanced stuff. Those are a little bit more for Jason's lessons. These may, to some of you guys, feel a little bit repetitive. Again, we have members coming in every day, and the beginner lessons are to teach them as well as to hopefully continue to pour into you guys with knowledge. So if they seem to be a little repetitive or a little too simple, again, I appreciate you guys showing up, and hopefully, even if you know a lot about this topic, maybe you learned a little something. So again, keep showing up. I'm proud of you guys. It's really, really easy to walk away, especially in the market we're in, especially how frustrating, small cap stocks have been. So you guys are, beating a lot of the country that are, traders right now because you're still here. So keep showing up and keep pouring into yourselves. Keep, staying positive and trying to learn, whether it's in PC or on your own, watching educational videos and stuff. And we appreciate you guys. So if you have any questions about this or anything, feel free to DM me or Dagan or Jason, and we'll get you guys squared away. All right, I will go ahead and end the lesson there. Again, thank you guys for showing up. Feel free to DM me if you have any questions, and we will talk to you guys 9:30 EST tomorrow. Have a great day, guys.